General Motors reporting $3.06 a share on the adjusted earnings. That was better than the street was expecting. The street was looking for a much lower number of $2.71. You also had revenue that came in better than expected as well. It was up by about 7%. GM at this point is raising its earnings guidance for the full year just based on what it's already seeing for this year. And that stock this morning up by 4.5%. This would be a 52-week high at $51.80. Joining us right now is the GM CFO, Paul Jacobson, to talk a little bit more about it. Paul, why don't you run us through what was looking better? From what I'm reading on this, it was very strong truck sales.
Yeah, good morning, Becky. And let me just start by saying thanks to the entire General Motors team for another excellent quarter where we executed really well. You were right. Our full-size pickup truck sales were up 5%. We picked up 3.5 points of market share on strong pricing and really competitive incentives across the board. So when you look at our strategy of meeting the consumer where they are and producing to the customer demand, it's something that has been pretty consistent with us over the last 8 quarters. Our compounded annual growth rate on revenues is up 16% just over the last 2 years. Sorry. So really strong execution by the team and really more of the same of what we've been seeing over the last several quarters.
You beat by 35 cents in this quarter that just ended. You're now raising your guidance for the full year, saying you're looking for $9.50 to $10 a share. Before you'd said 9 to 10, and the street was at the lower end of that at $9.45. Is that just based on the beat that you have right here, or do you anticipate that things are going to be better than expected in the second half as well?
You know, when we began the year, we talked about pricing being down about 2 to 2.5%. And said if it wasn't, we would expect to outperform. So this is our second beat and raise this year. We also took earnings guidance up by $500 million at the midpoint at the end of the first quarter as well. So we're still assuming in those numbers that we see 1 to 1.5 points of pricing decline in the back half of the year. We do that really just to be conservative against the market, but we're executing really well. And so far in the month of July, pricing looks very consistent with the month of June in the second quarter.
It does not sound like you're facing issues with consumers not being able to buy these things or afford these cars at this point. Do you need the Fed to cut rates in order to boost demand, or are you fine even if they don't?
You know, I think we're incredibly proud of our product offering. I think it's probably the best portfolio we've had perhaps ever at GM, and customers are responding across the board. It's not just the full-size trucks and SUVs, but the new Chevy Trax. Every month, sales are up 100% from where we were, and that vehicle is coming in more profitably than the predecessor vehicle that it replaced. So we've got a great refresh in our portfolio. We still have some mid-size SUVs coming to market at the end of this year, and more EVs to come. And we're continuing to make great progress on our EV profitability trends and feel good about where we're heading. I think consumer affordability, certainly for our customers, they've proven very resilient in terms of demanding not just new vehicles, but also continuing to buy up trim levels, et cetera. So I think it's been pretty strong for us. Certainly, we think the monthly car payments could benefit from some future rate cuts, but the business is performing well and has been even in this higher interest rate environment.
What are you offering in terms of discounts at this point? For a long time after COVID, those disappeared because there just wasn't enough of supply with all the issues in the supply chain. What do you have to offer right now, or what can a customer expect when they walk in?
Well, it depends on vehicle line. You know, certainly today we're seeing a lot of strong demand for our vehicles. We've kept inventory levels down, and there are some discounts across the portfolio, but we've generally been discounting less than the industry, and I think that's some of our outperformance. But it really speaks to the quality of our vehicles and the customer demand that we've created.
Do you offer discounts on electric vehicle sales? That's been a pretty tough market.
We have been, but not as much as some of our competitors have. We've been very slow and steady in terms of bringing vehicles out to the market. But I will say in the second quarter, our electric vehicle sales were up 40% in the quarter versus the industry up 11%. Those are on some small volumes, but we are going to continue to scale. We expect still to produce 200 to 250,000 EVs this year and wholesale them. And that's going to allow us to get to variable profit positive, which is the next step on our journey to getting an EV portfolio to profitability.
Let's talk a little bit about some of the tougher issues from this quarter. First of all, you're saying that you're going to be restructuring your operations in China. You had a loss of over $100 million in equity volume through that Chinese joint venture that you have. Sales have been in free fall there from what we've been hearing, and a big part of that is BYD and what they've been able to do, maybe the prices that they're offering as well. What are your thoughts? What would you say about what's happening in China and what your plans are there?
Yeah, we've had a long presence in China with our partner over there with SAIC, and it's done very well for us. Generally provided some pretty significant dividend streams over the years. We've seen pretty significant share erosion as we've seen the upstart independent Chinese new energy vehicles coming to market, and that share has really hurt our performance. We came into the year expecting to lose money in the first quarter. We had a pretty sizable inventory balance we had to work through, and we expected that was going to turn around in the second quarter. We highlighted at a conference earlier this year that the second quarter wasn't trending well, and we continue to see some of those challenges persist. So we're going to be working with our partner to restructure that business, produce to where demand is, work through the inventory, reduce our structural costs, as well as work on some premium entries that we'll be bringing to the market as well. And we think that we can continue to make that business strong and make sure that we get it turned around.
But the Cruise Origin car, that's a self-driving vehicle, no steering wheel in it, that you are stopping production indefinitely. What does that mean?
Yeah, so the Cruise Origin was a great concept vehicle that we were rolling out. Given the certainly getting back out on the road with Cruise, that we're now in 3 cities with the Bolt, the Chevy Bolt. That's a vehicle that actually is a lot more consistent with the federal standards. It's going to allow us to scale faster, and when we roll out the new Bolt at the end of 2025, it's going to be a vehicle that will not only be able to move faster, but much more efficiently across the board. So as we continue on this journey of making sure that we are gaining momentum in the Cruise autonomous business, we felt like the Bolt was going to be the best vehicle for us to do that going forward.